Welcome to the Keiser Report. I'm Max Keiser, a very special edition of the Keiser Report outside of the Kremlin here in Moscow. Yes, it's a nippy -7 degrees centigrade here at the Kremlin in Moscow with the Keiser Report, markets, finance, and scandal. And the scandals are piling up, and the bodies are floating to the surface. When Dubai announced it had real estate problems, I said that was the beginning of phase 2 of the global deflation, the global credit collapse. And now the dead bodies in the credit market are floating to the surface, and the scandals are piling up. Here to help me get through yet another chapter of markets, finance, and scandal, Stacy Herbert. Stacy Herbert.
Hi, Max. It's actually quite fitting that we're in front of the Kremlin, because in 1989, when the Soviet Union collapsed, history had ended, we were told. But I think we're at the second wave of history, and it's beginning again, and it kind of rhymes with the first time around. And the United States empire is now not only engaged in the 9th year of war in Afghanistan.
The 9th year of war in Afghanistan.
We've got gulags.
Gulags?
We've actually taken over some of the old Soviet ones.
That's right.
We're now assassinating, in the last week, we're assassinating our own citizens.
That's right. Americans are assassinating their own citizens abroad.
That's correct.
How gulag-like.
And now we've got the whole secrecy around what is happening with the economy. We've got headlines. There's a secret summit of top central bankers around the world are secretly meeting in Australia. At the same time, you've got the G7 finance ministers meeting in the Arctic Circle.
The Arctic Circle for the G7?
The G7 finance ministers, they're talking about their economies, their respective economies.
And they're trying to put some distance between them and Naomi Klein by hiding in the Arctic Circle, no doubt.
That's right. And we've got fake statistics, which is quite fitting with how when the Soviet Union had collapsed, there were lots of fake numbers coming out. So we have a headline.
Yes. Don't worry, they're just trying to break some ice over here. They're just major ice-breaking maneuvers all day here in Moscow, outside of the Kremlin, with a special Keiser Report. Stacy Herbert and Max Keiser. Tell us about these fake statistics.
So we've got some fake headlines, too, and fake statistics, and that was part and parcel of the collapse of the Soviet Union. We've got unemployment rate drops unexpectedly to 9.7%. So the unemployment rate has allegedly dropped. Unemployment numbers have actually increased, the number of people unemployed. But the numbers keep on dropping because the American government tells us that those 2.5 million workers who are no longer counted on the unemployment rolls have become discouraged.
Right. So fake numbers, basically. They say the unemployment rate is down, and yet we know that the true number, the E16 number, depending on whether you look at it seasonally or adjusted for seasonality, it's at 17.5%, 18% unemployment, going up to that depression high of 25%. But the U.S. government is putting out these fake numbers. How gulag state is that?
Well, we also have a headline which suggests that there are show trials going on.
Yes.
And that's ex-B of A chief Lewis charged with fraud.
Ken Lewis.
This is Ken Lewis, the former chairman of Bank of America. Now, he's been charged with fraud. And the headline reads like, well, we're doing something about all the financial crime that has occurred over the last few years. And surely Ken Lewis, Bank of America, big guy, is going to be taken down. But it's actually just a civil case.
Right.
And then the article goes on, fails to mention that any involvement by Hank Paulson, Timothy Geithner, or Ben Bernanke.
So Ken Lewis is like the OJ of this decade.
That's right.
It's a show trial. Ken Lewis is just a civil case. You might pay a little fine, but the criminality in terms of the forced marriage between Bank of America and Merrill Lynch, which Hank Paulson, the capo de capo, the #1 mafioso in the global banking scandal, put a gun to the head and said, you take this deal or you're going to take a cap in the back of your head, you're going to end up in the river, basically. It's a mafia capitalism.
Well, that's close to it, because if you read the blogs, however, you'll find some of the information. This headline, Paulson admits coercion, where are the indictments? Now, this was in testimony before Congress, and Hank Paulson, who is the Treasury Secretary at the time that Bank of America merged with Merrill Lynch, he admitted in testimony that he had basically coerced Ken Lewis into the deal, this forced merger, which now Ken Lewis is being charged with fraud for approving this merger without telling shareholders of Bank of America that, in fact, Merrill Lynch had $14 billion more in debt than they had actually admitted.
Right. So Merrill Lynch had all these huge portfolio of bad debt due to their involvement in collateralized debt obligations, through the magic of the never depreciating real estate market that they sold the world. And of course, banks all over the world have these non-performing mortgage-backed loans collateralized by tents somewhere in the Midwest by people who are surviving on peanut butter and tuna fish, and somehow that's worth $1 billion in a CDO market. And of course, Merrill Lynch was saying, oh yeah, we don't have any of that junk on our balance sheet. But now it turns out that even during the deal with Hank Paulson knowing the details, he failed to disclose. Failure to disclose, that's illegal.
Well, it turns out that Hank Paulson had told Ken Lewis that if he didn't sign the deal, if he didn't agree to buy Merrill Lynch, that Ben Bernanke would have him fired. And when he was asked by Congress why he did this, here's what he said.
I was attempting to send a very strong message.
Okay, so that's a great clip, and that'll go in the annals of American history when they write the history of why America collapsed due to the gulag state of America financiers and capos destroying the economy. It's apt that we're out here on this chilly evening discussing this in front of the Kremlin, because you would think that America would have gone to school on what led to the Soviet collapse. But of course, they did learn nothing. And now they're having their own collapse, as Dmitry Orlov, who we've had talking about before, talking about the collapse gap. There's a 15-year gap basically between Soviet Union collapse and America's collapse. And America is definitely collapsing because of these show trials and the Ken Lewis scandals and the Hank Paulson, the Ben Bernanke, and the Tim Geithner participating in fraud, and even more fraud.
And I might say, Max, I might add to that Ben Bernanke is then in the headline following that, Bernanke guilty of coercion and market manipulation. And this is the follow-up to what Hank Paulson came in. He was the tough guy. He said, you know, we're going to fire you. Ben Bernanke apparently came in, according to emails released from the Bank of America investigation. And this is an email from Joe Price, who's now being sued for fraud. He was the CFO of Bank of America. And then email he sent to Ken Lewis at the time, December 29th, 2008, read, the chairman of the Federal Reserve, Ben Bernanke, indicated it would be structured in a manner, so it being the merger, such that Bank of America stock should go up when announced. So Ben Bernanke was rigging the markets.
He was saying take the deal and the stock will go up?
That's exactly right.
Right, so they're manipulating the price of the stock. Now, actually, as memory serves, the Bank of America stock didn't actually go up.
No, it
so
didn't.
These guys are not only bad mafia captains, they're bad stock market manipulators. I mean, they should go to school in the hedge funds on Wall Street to learn how to really manipulate stocks instead of leaving it to the amateurs like Ken Lewis and Ben Bernanke and Hank Paulson. They are amateur market manipulators. Even though Paulson was running Goldman Sachs as CEO for years, you would have thought he would have learned a little bit better about high-frequency trading and market manipulation.
That's right. And then my final headline, secret banking cabal emerges from AIG shadows.
Oh, yeah.
So, you know, we've been talking about these secret cabals. They're quite open, actually. They're meeting openly in secret.
Yeah.
And now Bloomberg is writing that it's as though the New York Fed was a black ops outfit for the nation's central bank. So the New York Fed, at the time of all these bailouts of AIG, Bank of America, Lehman Brothers, all of the banks, the New York Fed was run by Timothy Geithner, who's now the Treasury Secretary of the United States. And at the time, and the New York Fed is not, they don't have to disclose anything to the taxpayer.
Right.
So Bloomberg is saying that it's quite clear from all the evidence emerging through congressional testimony that the New York Fed is kind of the black ops. They're the Blackwater, as Blackwater is to the CIA.
I get
There's no oversight over them. So all the fraud is passed through the New York Fed.
So like Blackwater does all the illegal murders on behalf of the Pentagon outside of the regulatory framework, the New York Fed does all the illegal fraudulent activity on behalf of the Fed in Washington under Bernanke. Now, Stacy Herbert, we've got a couple of minutes, so I wanted to touch on another big story we love to cover, and that is the BAE scandal. Now, the BAE scandal, BAE has got it, the British Aerospace, they have to pay a huge fine, another civil fine, because they were now, as we've been talking about, they've been caught in this huge slush fund scandal, multi-billion-dollar slush fund, although those are the exact numbers being reported.
That's right. They've pled guilty to defrauding the U.S. government, and they're paying a $400 million fine.
400. Now, what I don't understand, Stacy Herbert, is that supposedly the U.S. is fighting a war on terror. And yet Prince Bandar stood in Tony Blair's office and said if your serious fraud office doesn't call off the investigation into the slush fund that Prince Bandar of Saudi Arabia is involved with, he cannot protect the Britons from another 7/7 bus-bombing terrorist attack. So here you have Prince Bandar threatening Tony Blair in his office with terrorism. And Tony Blair just going, oh, la-di-da-di-da, well, Prince, we'll see what we can do. Then he goes on TV and he commits billions to more spending on behalf of for the British taxpayer to fight terrorists when he himself is complicit with terror.
That's correct, but I have a question. Did you ever find out where Prince Bandar is? I know
well, Prince Bandar is missing. Prince Bandar apparently is missing, so we're not sure exactly where he is. He could be with Ken Lay, if you remember Ken Lay.
He actually hasn't been seen since all these stories I'm talking about, the Bank of America merger. He hasn't been seen since December 28th. And now I also actually want to bring up the fact that the European crisis is now spreading to the sovereign debt default. This is something that we said in the beginning of the year to look forward to. This is one of the 5 big themes of the year, that we would have sovereign debt defaults. Now we have this crisis now emerging throughout Europe, and we have the Greek debt situation, that Portugal and all the pigs as are known, P-I-I-G-S.
Right, P-I-I-G-S, Portugal, Ireland, Italy, Greece, and Spain. Not to be confused with the coma states in America: California, Oregon, Michigan, and Arizona. Those are the states in America.
But this is a continuation of what we were talking about, the collapse of the debt-based empire, the U.S. empire of debt, as you might call it.
Right. So the contagion, which starts with part 2 of the global credit collapse, which Dubai was really the beginning of part 2. That's when we saw the end of the so-called green shoots that people were talking about. This is the beginning now of the second phase of the collapse. And you can see sovereign debt, because all the banks on Wall Street and in the City of London got their governments to allow the commercial banks to take all their toxic debts and put them onto the government's balance sheet in exchange for huge amounts of capital that they awarded themselves as a Christmas bonus.
Well, that's correct. As Simon Johnson, who was the former chief economist of the IMF, said, you know, the financial oligarchs were able to use their influence with the politicians to transfer their trillions of dollars of debt to the taxpayer. And now those bills are coming due, and the taxpayers slowly starting to learn that they owe quite a lot of money.
More markets, finance, and scandal. And we're going to be back with an exciting interview right after this on the Keiser Report, so don't go away. Welcome back to the Keiser Report. I'm here with Sergey Guriev. Welcome to the Keiser Report.
Thank you very much.
Okay, Sergey, finance ministers and central bankers are meeting around the world preparing for the second wave of global credit crisis, the sovereign debt default crisis. How has Russia fared economically, and how will they fare during the next phase of this global crisis?
Well, Russia is actually on the other side. Russia is a net creditor to the world. Russian government still is sitting on a pile of reserves, and in that sense, the Russian government is worried about other countries defaulting. So Russia is worried about Eurozone issues, Middle East issues, and that is what worries Russia. But overall, I agree that there is a serious risk of some European countries and Middle Eastern countries to be unable to manage their debt.
So Russia's reserves, they took a hit during the last phase and they've rebuilt. How is that going?
It's going up. Russia is particularly rebuilding the central bank foreign currency reserves, the what's called National Welfare Fund, which is a long-term sovereign fund to be covering up the pension system's deficit 10 years down the road. This fund is also going up. So with oil prices at 70 or 80, Russian reserves are actually piling up.
Okay, now I read a commentary recently about the price of oil, that if it gets too high, it tends to foster a continuation of the status quo, if you will. And if it gets too low, of course, then it's bad for income. So is there a sweet spot where the price is both low enough to spur to diversification of the economy, but not too high as to, and also to get people kind of falling back in the status quo? Is there a sweet spot in your opinion?
Well, right now we think that 70, 80 is actually above that critical threshold. The government is still trying to maintain the stability and the status quo. We see some noises and signals, but generally 70 or 80 is probably leading to what we call 70-80 scenario. Russia is doing what Soviet Union was doing in 70s and 80s of late Soviet Union. So the risk of maintaining the status quo is exactly the most important risk. If it goes down to 50 or 60, there'll be a lot of pressure to reform and diversify. If it goes down to 30 or 40, Russian government will face a severe fiscal crisis.
All right, so I guess the youth in Russia is rooting for maybe a slightly lower oil price.
Well, some people do, yeah.
Okay, and now let's take a look at the euro bond market and the bond market, because Russia's coming to market with now for the first time, I believe, since '98 with a euro bond offering. So tell us about that.
So Russia has made this choice to borrow some money, and that will be not a large amount. Probably it's something like $20 billion, and that would be in the range of 1.5–2% of GDP. So it's not a big difference to Russian sovereign debt, which is virtually non-existent by now. So one shouldn't think as if Russia is coming back to 1990s, where it had a pile of sovereign debt that it couldn't really service. No, it's more like to restore credibility, also price Russian debt, to understand how Russian debt should be evaluated for corporate debt, having a benchmark to sell against. And in that sense, I won't dramatize this particular development.
Okay, so the so-called pig nations pigs in Europe with two eyes, as their bond market is challenged, certainly sovereign default, this could be a time for capital possibly to find its way into Russian bond market.
Oh, absolutely. Russian bond market will benefit from that. Also, we already see the stock market benefiting from global investors looking for high return emerging market stocks, and seeing that some other emerging markets are actually resisting the inflow of foreign capital. Russian market is benefiting big time from that development.
Okay, I want to talk to you about two items: the Canadian dollar and gold bullion. Russian reserve seems to be diversifying into another reserve-backed currency, the Canadian dollar. What's happening there?
Well, that's something we don't really know. This is more or less confidential information. We only see
on the Keiser Report, we're breaking the news. You're versus diversifying into the Canadian. No, I read this in the financial press. It's not a secret.
It's not a secret, but it's also not official information.
Okay.
I think it makes no sense to diversify in resource-backed, in commodity-backed currencies like Canadian or Australian dollars. I think Russian reserves should be diversified into currencies which are negatively correlated with resource prices, like American or Euro, or whenever Chinese yuan is a market-based currency, then Russia should buy more Chinese yuan.
Okay, now in the global macro situation this year, it appears as though we're seeing a return to the theme we saw in 2008, which is deleveraging, unwinding of positions, and this gives some support to the dollar. So as an economist, the dollar is gaining strength. Is this the basis, do you think, for the strength in the dollar? And if so, where does the dollar top out, if at all?
It's a good question, because I think the most fundamental long-term issue here is piling up U.S. sovereign debt. which is going up with a budget deficit due to fiscal stimulus. And the problem is we don't really know how America is going to service the debt, which is by official forecast is going to reach something like 100% of GDP in 10 years. So I think this is the most important issue, which will exert some pressure on the dollar. The question is indeed whether the dollar will top out against euro or yuan. These currencies also have some issues. So in a sense, there is a fundamental uncertainty about the dollar, and we don't know how that plays out in the coming years.
And gold bullion, your thoughts? I believe Russia has been buying some gold recently.
Right. Again, this is not officially recognized how much Russia's bought, but
that's what I heard. I was at the Kremlin, right behind me. I came out of a meeting, and they said they love gold. They watched the show.
Yeah, I think the problem is gold doesn't have a fundamental value. It's the market for gold consumed as jewelry or whatever other uses, maybe industrial uses of gold, is very small. In that sense, oil is a much better commodity than gold. But yes, every crisis like this brings back the ideas that gold is an anchor of stability. I don't think gold can be a nominal anchor, exactly because it's such an illiquid rather than liquid commodity.
Speaking of liquid assets, Russia has 20% of an extremely valuable liquid asset, fresh water.
Exactly.
Economically speaking, there's more and more concern about the water wars and tensions geopolitically in terms of fresh water. Have you looked at that at all in your economic studies?
No, this is something which is still not well understood, how to price freshwater reserves. Russian and international economists already look at the climate change, Kyoto, post-Kyoto discussions, how to price air, if you like, clean air and pollution. But water, I think this is a commodity which will be indeed scarce in the coming decades. But how to price it, I think there is no agreement yet between economists.
But certainly it's a valuable commodity going forward, without a doubt. Now, so the prognosis for the Russian economy obviously had a currency break in '98. There's been a rebuilding of the reserve, and if the price of oil doesn't go too high, there's going to be more of an entrepreneurial push from the grassroots. And where will that diversification come? Will it be in technology? Where will the economy diversify?
Well, Russia is a normal country and can follow other countries that diversify and modernize. And the official program is indeed for Russian economy to become more innovation-based, knowledge-based, and that would be great. But Russia still is underserviced, underbanked. There is still a lot of infrastructure to be built, so one shouldn't really say that Russia has no other sectors to diversify into. Russia is still to grow into so many areas that one shouldn't really focus on one.
Okay, now Simon Johnson, who's a former chief economist at the IMF, he likened the U.S. to the situation he saw in 1998 in Russia, that oligarchs take an economy down by taking increasingly risky bets, knowing that the government eventually bails them out. So it's this moral hazard problem. The oligarchs in America, or in Russia at that time, they take the bets and then the government bails them out. Now, he cites the, quote, classic Kremlin bailout technique. Here we are in front of the Kremlin. The assumption of private debt obligations by the government. Do you see any patterns, similar patterns, U.S. and Russia?
There are some similar patterns. Although Simon, of course, exaggerates. Russian oligarchs had huge ownership stakes in Russian industry, while American financial oligarchs would be CEOs running large banks, but still owning very small stakes in those banks. Yes, the same moral hazard issue, and we saw some patterns like this in this particular crisis. We saw government bailing out one particular oligarch, Mr. Deripaska, owning Basic Element and Rusal, and the Russian government has helped Mr. Deripaska to go through the crisis. As for other companies, I would say the support was rather limited. Russian government has bailed out Russian automotive industry, most importantly Avtovaz. Russian government bailed out some government-owned enterprises, but on this scale of previous times, that didn't happen. It's just a couple of isolated cases.
So the oligarchs in America are more virtual oligarchs. The neoliberal...
Hired oligarchs, if you like. They're just CEOs, hired managers. Yes, they want to keep their jobs. Yes, they want to keep their nice lives, but they're not billionaires, like multi-billionaires like Russian oligarchs.
Yeah, they're pretty wealthy. No
Russian
doubt.
oligarchs are.
They love to sell.
Yeah, yeah.
Tim Geithner says that the U.S. will never lose its AAA rating.
Well, we've heard Moody's giving a warning that may happen.
Yeah.
And with that level of government debt, if dollar were not a reserve currency, that U.S. would have already faced a lot of trouble. But still, the fundamentals of American economy are great, and if you think about the sources of productivity growth, research and development, innovation, universities, general rule of law, markets, financial and legal institutions, they're all very strong. So I think nobody would like to doubt American growth potential. The problem is, of course, we need to understand how the United States will balance its budget, how the United States will pay back the debt, and that may result in serious redistribution, in taxing some industries, some parts of American society. When we know that, we may actually learn that some industries will slow down and will not grow as fast.
Okay, so by redistribution, you're talking about wealth redistribution.
Yeah, taxation of the wealthy.
Yeah, and
and of entrepreneurial, probably.
Yeah, and the spread between the richest and the poor in America is growing wider every month, seemingly, and this is causing, some social dislocation, some social unrest. So fundamentally, yeah, there's a lot of growth there, but without getting rid of that underlying layer of corruption that we're seeing, it's very difficult to realize that potential, especially if these oligarchs in America keep getting bailed out, and this moral hazard plays out in a huge way. It's hard to get to foster that entrepreneurial spirit.
I would say you're right, but it's in relative terms, of course, America is still not corrupt compared to other nations. We are not talking about Nordic nations where by independent assessments are much less corrupt than the U.S., but comparing to countries like Russia, of course, America is much less corrupt.
Sergey Guriev, so much for being on Keiser Report.
Thank you very much, Max. My pleasure.
And of course, if you want to send us the email address is keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.